Hello everyone, and welcome back. Don't forget to subscribe for the latest Bitcoin news and price predictions. Peter Schiff joins the CoinGeek weekly livestream to talk about Bitcoin as digital gold. Peter Schiff is a well-known economist, money manager, and gold bug. This week, he joined the CoinGeek weekly livestream and talked to Kurt Wuckert Jr. about Bitcoin, the recent market carnage, and much more. Wuckert attempted to educate Schiff on the real Bitcoin. Did it work out? Welcome, Peter Schiff. Wuckert begins by asking Schiff for a 2-minute introduction. He clarifies that he's not just a gold guy, but he does believe it is money and that the founding fathers of the United States put the country on a gold standard for a reason. He thinks the world and the US would be much better off had it not abandoned the gold standard in 1971. Schiff doesn't just believe in investing in gold. Instead, he believes in keeping powder dry in gold before deploying it to productive investments like real estate and stocks. At Euro-Pacific Management, Schiff's investment firm, one of the strategies is to buy gold and silver mining stocks, as well as the metals themselves. By the way, if you want to support, please support by liking the video and subscribing to our channel. Tokenized gold. Wuckert mentions that he has heard Schiff speak at length about Bitcoin and agrees with many of his critiques of it as digital gold. However, he asks for his thoughts on the potential of tokenizing gold on blockchain to transmit it across the planet. Schiff says he knows dozens of people working on such projects right now. He emphasizes that gold itself is never tokenized, it's a physical asset in a vault, but that evidence of ownership can be. He points out that such systems, paper claims on gold, have always been a more effective way to utilize gold as money. Blockchain technology can make this more efficient, transparent, and easy to use gold as money once again. Gold versus fiat currencies. As fiat currencies depreciate, Wuckert wants to know if Schiff's position is that gold will increase in value or remain steady. He replies that when gold is $6,000 an ounce, that will be a significant jump from the $20 an ounce it was when the US went off the gold standard. This is because the value of fiat is going down rather than gold is going up. Based on the enormity of the deficits and the sheer scale of fiat currency creation in recent years, Schiff sees the dollar losing a lot of value in the near future. However, even if gold is $10,000 an ounce, it doesn't mean gold has gained value, but rather that the dollar has lost it. Bitcoin is not digital gold, and the necessity of the Satoshi unit. Wuckert tells Schiff that Bitcoin split, leading to the scaling and hash wars, and outlines his position as a big blocker. He reminds him that BTC has been debased and that Bitcoin was always capable of issuing assets using Bitcoin script. For example, one could issue a central bank digital currency or a gold-backed token backed by Satoshis in gold. The technology is there to do this right now, but businesses don't want to do it yet. Schiff says he doesn't see why it needs to be built on a layer of Satoshis. He also says that all of the money that has flowed into the sector so far was directed at creating tokens out of thin air, and this greater fool theory is why serious money hasn't moved in yet. Add to this that BTC advocates have relentlessly attacked gold, and it's little wonder that nobody has properly tokenized gold on the blockchain. Bitcoin is not digital gold, Schiff says. Wuckert agrees and says this is a sophomore understanding of Bitcoin. He explains that using Satoshis to underpin gold tokens would be done because miners would have to process the transaction, and they use Bitcoin as a unit of account. Schiff still can't grasp the necessity of the Satoshi unit and says Wuckert may need to show him something off-air to explain why it's needed. Wuckert explains the concept of BSV to Schiff, explaining the ability to do microtransactions and put millions of transactions inside big Bitcoin blocks. Schiff notes that Wuckert is at least attempting to make Bitcoin useful and says it could potentially be alternative money to government-decreed fiat. Reintroducing gold and the free market. Wuckert notes that Bitcoin allows us to pay for a single instance of computing and dramatically reduces the cost of financial transactions. He asks Schiff to imagine doing a transaction on the blockchain that notifies everyone how much gold was transacted and other details right down to the serial number of the bar it came from. Small, casual transactions and electronic cash. Schiff states his position that we all have the right to private transactions. Wuckert explains that Bitcoin as an electronic cash system could allow for this sort of transaction, allowing us to conduct small, casual transactions without revealing lots of information about ourselves. Fed is more hawkish than expected. The revision to the FOMC plot showed that, on average, the monetary policymakers expect to raise the rate up to 5.1% in 2023 before lowering it to 4.1% in 2024. That means the Fed will have to raise the Fed funds rate another 0.75 bits per second in 2023. Whether that will happen in 3 steps or less is something Powell declined to commit to on Wednesday. More important than speed is the question of how high interest rates will ultimately have to rise and how long we will remain at that level, Fed Chairman Jerome Powell said. By the way, if you want to support, please support by liking the video and subscribing to our channel. During yesterday's FOMC press conference, the Fed chairman proved to be extremely hawkish. At least, he tried to emphasize this again and again. Investors had hoped that interest rates would rise less sharply in the coming year and are now worried that the Fed could trigger a recession in the US with its policy. However, Powell stressed that the Fed is determined to bring the inflation rate back to the target of 2%. However, there is still a long way to go before that happens. In addition, the Fed chair emphasized that he wished there was a pain-free way to fight inflation. But there isn't. Economists react to Powell's speech. The fact that the Bitcoin price did not plunge lower after Powell's comments yesterday could also be due to the fact that the market does not believe Powell's words. The Fed's hawkish policies increase the risk of sending the economy into a recession. In this case, political pressure on Powell would increase, former Fed Governor Frederick Mishkin indicated. After all, Mishkin asserted, it would then be particularly difficult to raise interest rates further when the economy was already doing badly. Star investor Jeffrey Gundlach of Double Line Capital expects a recession in the first half of 2023 when the Fed would do an about-face and cut rates again, he said Monday at an online event. The concern that monetary policymakers could do great damage to the economy outweighs the will to fight inflation, he said. Even if central bankers are saying something else at the moment. Lisa Abramovich of Bloomberg Surveillance described the sentiment of many analysts on Twitter as follows: "The Fed, we're hawkish. We have more work to do. The market, got it, so you're doing another step down to a 25 BP rate hike in February and will be cutting rates by later in the year. Got it." Abramovich bases this assumption on the fact that Powell repeatedly spoke of the Fed's best estimates as of today. Powell may have thus given the green light for a 25 basis point hike in February. Tom McClellan from The McClellan Market Report wrote via Twitter that the Fed's rate hike cycles usually end when the Fed funds rate reaches the level that the 2-year yield has already reached. We have that condition now. So the Fed should stop, but there is no indication that they know that, based on the post-meeting announcement, McClellan wrote, referring to the chart below. The Bitcoin price has seen a strong run ahead of the FOMC meeting but has held up very well despite a hawkish Powell. Thanks for watching. See you next video.